The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. Early edition. This is 8:06 a.m. in the morning Eastern Time instead of 10:06. We've got the Dow futures up 57. Very impressive session yesterday. Even though it gave back half of those gains, we're watching to see what happens here. Look, I'll do this very slowly. Look, here's a 9-period exponential moving average. It's still very weak, but it has turned up. To cross positive, it's going to take the Dow to go, I would say, pretty much into the 38,000. I'll give you a number right now. Yesterday's high was 38,000. This is on the futures, 38,662. I think 39,000 is going to be needed at least to get that pink 9-period moving average getting close to the black 14-period moving average, and maybe even crossing positive later this week. That's if we continue rallying, and I'll explain what I'm looking at. Look how the YM, this is the Dow futures, went right to the 200-period exponential moving average, got a nice W formation in the on-balance volume. Stochastic went from the single, I can't remember if it was actually single digits, but very close to single digits or low double digits. And now it's at 27%. That's a good sign. Look at the histogram of the MACD, the moving average convergence. That's starting to improve. But this is all a work in progress. Why? Because that weekly chart really had a very severe decline, and that decline put the price for 3 sessions now, 3 weeks, including this week, way underneath the 14-period moving average. So this is a work in progress. Now, what we're looking at in the E-mini, something slightly different. That was not as impressive a rally to the upside yesterday. We need to see at 5,057.75 right now, up 10. Remember, this is pre-market, so a tremendous amount happens from the moment the bell rings. I'm looking at this when the show is recorded at 10 o'clock to 11 o'clock. I'm trying to anticipate. But if I use just basic Chapman wave techniques, look, if I draw the line right here, and I'll be as conservative as possible, I won't go to the outer wicks. This is the Chapman wave falling axe formation. It's really, what is it? It's just an expanding cone, declining cone. Look what you have to do to get the price back to the 5150 level. This is the E-mini, which would be very impressive. And it's come down from the 5340s all the way down to where we are right now, and even went to the 49, what was the low there, 4963.50. So to really turn this around, the histogram of the MACD is only just barely turning up. The relative strength is very weak. Stochastic is very weak at 13%. This is a different picture altogether. So the E-mini is way weaker than the Dow. Look at the QQQ. I'll go to the NQ for the moment. This is pre-market, pre-market open at 17,376, up 27. That bar yesterday was kind of nice, but look what happened Friday. I mean, we plummeted to really break out. You need, I'll give it the entire week, all the way to Friday at 4 o'clock, to touch the pink 9-period moving average of 17,642. In this particular instance, none of the technicals are really impressive. The stochastic's still down at 8%. The on-balance volume has turned around to the upside, but it looks very weak. And that weekly chart doesn't look very good at all. It looks so as if the 9-period moving average in the weekly chart is so close to turning negative. It hasn't yet. And now let's look at the RTY, which is the Russell 2000 futures. Had a pretty nice session yesterday, getting back above the 200-period moving average briefly in the daily chart, not closing there. And today, again, it's being repelled at that line. It's down 5.80 at 1976. This is going to take a lot to really turn positive. In fact, in this case, Although the pink moving average is 9-period moving average is right here at 1992, it's the 2010 14-period moving average that needs to be pierced, and then you're going to see something very different. And that weekly chart doesn't look very good. And gold plummeted yesterday and it's down sharply again today, down 26. Remember, spoke about this. I mentioned that for my subscribers from opening call. I said that there is even a hint of peace, at least some short-term peace in the Middle East. You will see gold drop sharply, and you will see crude oil drop sharply. So gold is down 26, silver is down 22 cents at 27.03. Had a very ugly candle yesterday, yet the 9-period moving average is still very positive. It is a peak D in the weekly chart. And look at this, crude oil. Crude oil is down 77 cents. Got repelled at the 9-period moving average, which has turned pink for the last couple of days at 81.13. We did make a peak D. Remember the Chapman wave, always looking for those Ds. That's the fourth highest peak is where other things can happen. Lo and behold, that's what you've got. Where's the mouse? Right there. That's what you've got in the daily chart, and that's what you've got in the weekly chart. The weekly chart back in September of last year, 2023, made a peak D, pull back. Now it's made a cup formation, but it couldn't reach even the inside wedge target resistance line. So this is at a peak D. I don't like to see Ds way below the previous high. That usually says, there's a lot more weakness here. So I'm watching crude oil. Well, all of that should really help the market. But here's the thing. The bonds down another half a point today at 114 and 3/30 seconds. To me, that's really telling the story. That is a really big kind of an overhang, a dark cloud that's sitting there with the yields going high. Look at the TBT. That's the inverse of the TLT. This is the ultra short limit 20-year Treasury bond ETF. So this is the overview that I've given you. And the VIX index right now, the VIX index is down again 24 cents at 16.70. Now, this is going to be very important because to have a follow through after yesterday's, the Dow was up over 400 points. It was really an amazing thing, but it closed only 200 something points up. And most of the indices did give back quite a chunk of that move to the upside. What are we looking at here? So the VIX index is essentially saying that 21.36 high that was made 3 days ago is now, that high shouldn't be reached at this particular stage until there's another either conflagration, bad economic news, something like that. So that makes the whole area of 18, it's the 1670 right now, something to watch. Going above 18 says, now the market's vulnerable again. But staying below says, even though I've been discussing this and I'm going to go through it right now, all these 9-period moving averages, here is this is the YM. Look, YM, that's the Dow futures, sharply underneath the 9s, sharply under the 14. If you go to the E-mini, there's the daily chart, very sharply, and prices underneath the 9s underneath the 14. Let's just go for the moment to the NQ. Look at that. That's way deep. That's a real problem. I'll be back in a moment. Basil Chapman, early edition. It's now 8:14 a.m. in the morning.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Good morning, everyone. Basil Chapman, early edition. This is 8:18 a.m. in the morning. It'll be recorded and played back at 10 past. This will be 18 past 10 when it's played back. So let me just show you this quickly because it's active and it's live. This is like the 5-minute E-mini chart. Look at this beautiful arch formation. Went from a peak A all the way to a peak F and come down. Looks like it's going to come back in a shorter time period, at least another couple of bars, another couple of 5-minute bars. And the 200-period moving average of 6,049, that's going to be a really important support level, at least going into the opening today at 9:30. All right, let's get back to what we were looking at. So I was showing you how important the 9-period moving average has been in my work, why we considered that when finally the SMHs came down, that would be a timeout for the semiconductors for a little while. And you can see this chart right here. Look at that. Finally, you got that pink 9-period moving average will be negative for quite some time from the high right there on the 7th of March at 234.91. Anticipating that at some point, take a little while, but that 9-period moving average was green because it was over the 14, which turned pink. It only did that for 1 or 2 sessions back in January, ever since the start of the 4th of November, when it went positive. So this to me is very important. It's part of what I like to look at. So the IAI, which is the broker-dealer ETF, had a really strong session yesterday. Schwab has been up near recovery highs, SCHW. Look at that. Right here, look, the all-time high, 96.24, comes down. It did almost a 1-to-1 to the downside. There's a Chapman falling axe formation, inverted, and it came right back down. And now it's rallying, and this is going to be very important. Why? Because it's leg C in the weekly chart for Charles Schwab. So they've been benefiting from the rise in Bitcoin, the rise in gold. So we'll see if at this particular point I need to go to Bitcoin, and I'll show you Bitcoin right now is trading down 595 at 56,015. Look at the way the pink 9-period moving average still has a way to go to get positive. So this is just suggesting to me that the high that was made at 75,185 was a continuous contract. Let me just check to see if that really is still the price that gets. Yep, so still the price. Back in March, that is still active as a rectangle that's been making lower highs and lower lows. In fact, if you did yourself, look at this. If you went 1-to-1 to the downside, let me make this nice and thick and you'll see what I'm talking about. Okay, it's there. I can see it. So we'll make it there. We'll make it blue just to outline it there. And then I'll click to say not remove, but new parallel. And look at that. So this is just a perfect 1-to-1 to the downside. This is a Chapman wave. Look, this is a rising. This is a rising wedge formation. Took it out. Now this is going to be very important because there has been a rally, and the rally is starting to make lower lows and lower highs. And within that context, if you look at the weekly chart, look, that 9-period moving average is way over the 14. So that just says in this particular context, you would have to see Bitcoin drop below 57,000 to even start to make an impact with that green 9-period moving average moving towards the 14, let alone going negative. It would have to be 52,000 for that green to go negative. So as I'm looking at this right now, Bitcoin's had a spectacular run. It's now taking the sideways move. You remember, we've seen this in other stocks. It doesn't matter what it is. The pattern is the pattern. Look, we saw that in Microsoft. Had a spectacular run, and then went sideways and started to make lower lows and lower highs. And then what it did is more than a 1-to-1 to the downside. It went to the Chapman wave inside wedge, target support line right there, and a beautiful left side, right side price time edge to that peak D, the midpoint right there. I didn't draw that in. I will draw it in right now. And right here is where we're going to see whether or not up $1.29 right now, pre-opening at 402.25, where the Microsoft is actually able to have a rally to make another arch formation before maybe even dipping a little bit lower. We'll see, because that weekly chart is starting to weaken, but it's still got the 9-period moving average over the 14. So one by one, what was it? Meta did a very same thing, ran up, went sideways, and then took out the left side support, straightening up 546 pre-market at 488. Is that able to hold? I'm not sure yet, because that 9-period moving average went very negative. MACD's negative, relative strength, the little gray line there, is weak, and you did have a little bit of a bounce in the unbalanced volume, but the stochastic's only at 26%, suggesting that some of these really, the big caps are having, they've had their day in the sun, and now there's a little bit of cloudiness. And that just tells me that any rally at this particular point, and I need to clarify, we actually added to our long, I got a mixed picture here. We've got a short position in the Dow. We've got a lot of long positions, long-term long positions. We added yesterday, pre-open, to the long side, an aggressive 3 times small, but an aggressive 3 times long. So we've got this little insurance policy here with our 1-to-1 short, and I'm just gonna I'll take that off tomorrow if there's a strong session today. I need to see the proof. The proof has to be that there is a rally here, and the rally is able to, from yesterday, that was very impressive. If it was just 200 points and we only closed up 100, that's one thing, but going up over 400 and then closing up over 200, I have to say that was very much like an oversold bounce that has the potential to at least garner enough technical support if it keeps rallying, but only if it keeps rallying. If you're looking at Google, so there's a Goog up near the all-time highs, doing really well, trading at 158.31, up 36. Now, this I spoke about this yesterday, and I completely forgot. So here's General Motors. I showed GE and I showed General Motors. General Motors was not looking very good. But what I was going to say is, I've noticed something when I drive, just from when I was just a kid before. I mean, when I'm talking about a 5-year-old, 4-year-old, I've always noticed style and car design. I don't necessarily have to own these things. I just love to look at them. The car that I loved the most was my old Carmen Ghia, sunburnt orange with a brown top. I love the design. To this day, when I see one, I say, wow, that was just such an incredibly beautiful design. That's anyway. So back to General Motors. Well, and I've noticed for some time now, I'm seeing a lot of Chevys and a lot of GMCs. I think I don't know whether it's price. I don't know whether people are just coming back to buying American. And of course, buying American doesn't mean it's pure American, because there are so many different parts from other countries. But I'm seeing a lot more General Motors cars on the road. And that came out this morning when they said they had a really good earnings. They're up 2.04, up 4.7% at 45.25. I mean, compare that to a Tesla, which is down 10 cents today at 141.95.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so let's get to this because it's 8:30. Was there any economic news? No, it's only a Tuesday. And look how the E-mini is trying to rally. Now it's up 11. The Dow Futures is up 67. So I discussed this on the show for weeks and weeks and weeks, saying for the market to really tank, it needs to see the futures down 48 to 52. That's the S&P. The Dow Futures down about probably 370 to 420. And then there's an intraday rally attempt, and then it fails and closes at the low of the day. And then it tries to rally the next day, and it does exactly the same thing, and it has to be continuous for 2-3 days. So what we've seen here is more just a rather large correction, a breather in the daily charts. They're starting to impact the weekly charts, and even this move that we've seen from yesterday to today, to me, is speaking more of enough residual strength to push the market higher. That's the way I'm looking at it. There was a mention in the den about the Chapman notation in the TNX. That's the 10-year Treasury note. Peak D, beautiful left side, right side price time match in the right there. Look, there's the low. There we are going. But I do tend to do it to a place that I choose. It isn't a real bowl or cup formation, because on the left side you haven't got a high. I've just chosen because on the way up or the way down, just as I did here in the E-mini, right here in the E-mini, there are different steps, and you can't expect that it just goes straight to one. It just goes straight down to the lowest. There are all steps that needs to be met, and it hasn't even gotten in this 5-minute chart to the first step. It went to the Chapman inside wedge support line. So let's just go back to what we're looking at here. So the TNX 49.97 is really the level we'd be looking at. I'll be right back, but right now it's at 45.46, 46.46. I'll be back. Oh, not the break yet? Didn't I get music? So anyway, sorry about that. I thought I heard the closing music. I thought it was a little quick. Okay, so here we go. So what we're looking at at TNX is the high that was made on the 23rd of October at 49.97. But I chose not even the high of this red candle. I chose the very next bar. That's the high of this bar of the 15th of November of 2023. Going to the high, I'd probably have to go to the high, not the 14th, but the 13th, and that's 46. Let me go to 46.96. All right. So as far as I'm concerned, yields are in the higher range. I haven't got a sign yet to say they're starting to decline. The weekly 10-year is in leg D. Look, the MACD is strong. Stochastic's way up at 88.75%. That and not yet flat. Hasn't even flattened out. It's still rising. So I'm just suggesting that this is still an area of concern. All right. So let's get back to what we were looking at. And I had a question. Let me get to that. Oh, I had a question. An email that said, could I look at Doug? And it's not D-U-G, it's D-O-U-G. And D-O-U-G is Douglas. Elman. Oh, that's the realtors. Okay. So the questions, let me just read it to you because it's a good question. It's quite insightful in terms of where it's going. Hi, Basil. Can you look at Doug on the show for an area you think there might be some support? Doug is a luxury real estate broker whose stock has been hammered due to rising rates. However, they serve the high end of the market where prices just hit an all-time record according to CNBC. Luxury buyers also tend to use cash more often for purchases, correct? And of course, you've got foreign buyers who also like to use cash. Another stock in the space, HOUS. I didn't even see that part, HOUS. So this is Douglas Elman trading at $1.26. Had an incredible down move from the almost 320 just the beginning of the year. And here it is cut in half. Not quite, more than cut in half. And look at the monthly chart. So this to me, this is tough stuff. This is where if you're right, you can do really well. And if you're wrong, you know exactly what you can lose. You can lose $1 something. But House doesn't have the same chart. It's held better, but the weight of evidence is suggesting that at $5.48, there might be upside, but it's more stuck in a range than anything else. As a trade, I'd say right here at 548, if you nibbled on that, you could see a bounce to the 580 level, maybe 590, but then you're pretty much looking at a good chance of coming right back to where you are. The other one, Doug, is make or break in a sense that the candle that we saw yesterday is the first green candle in about 3 weeks, 2.5 weeks, that has the on-balance volume at the lows and turning up, but the stochastic is only at 650. Okay, I'll make this as short as possible. So a house has been around longer and held the 2020 low so far. Thanks. Yes, good point. So, okay. If you're going to choose between the two, I think house is the one that has a little bit more history to it, and correct, it is holding better. If you are looking purely speculatively and your analysis is correct, and that analysis, I can't necessarily disagree with it, but there's also something else you've got to take into account, and that is very wealthy people tend to get nervous way quicker and tend to go to cash or just go into positions that are much more safety conscious. It's just the way it is. So I'm not going to put that into the pie. Right now I'm putting into the pie the chart, and the chart says, make it as simple as possible. At $1.26, if you were to start a really small position in Douglas Elliman, I would say it needs very quickly to hit the pink 9-period moving average of 133. And that's just going to tell you, if it does that by, I prefer to say Wednesday than today, but I'm going to say Thursday. If by Thursday, it's even if it gets to $1.31, just 5 cents or so higher, that's saying to you could be right in your timing. And if you're right, there's a real good chance that just slowly but surely it'll creep higher. But both of them offer risk because they've just been in a major downtrend. So I hope that helps you. So I'm just saying to you, yes, if you're going to start a position, I wouldn't get carried away. I'd rather add on strength and not too much. I'd have just this X amount, and I'd use up that X amount in little bits on the house, HOUS, which is called Anywhere Real Estate. Yeah, I saw the name go by once on a ticker, and I thought, gee, that's an interesting name. House is a symbol. This is a little different. This is one that when it starts to rally, it has big price movement. So at 548, if you're going to nibble on that one, this is one that I would actually add. If it pops to 563, I'd add just a little bit more. I wouldn't get carried away. All of this is small. And you should have a very nice move. If it's going to move, it goes to $586.10, and it does that within a week or two. All right, now the futures are moving nicely. Dow's up 110. I'll talk about that when we return.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we're back, and this is the early edition for the Tiger Technicians Hour. What we're looking at here is the race, which is the Ferrari mentioned in the 10. Yeah, that's made a leg D, maybe a peak D this month in the monthly chart at 442. Peak F in the weekly and a peak E in the daily, and it had a Chapman wave 2-bar reversal right there on the 27th, I believe it's 27th and 28th of March. So it's pulled back from 442.80 to 410.27 yesterday. It actually went down to the 406 level. Yeah, Ferrari. That yes, is also a measure of nervousness in the general market. So I want you to go through a couple of things here that I believe is what we need to look at in this particular phase, this particular week, this particular moment. So when I go to, let's go to this SMHs, because to me, where the semis go, the general market goes. But sometimes there's a delay, and sometimes one leads the other, but they go in the same direction. So the high that was made at 239.14 on the 8th of March, then you had this beautiful cup formation, dreaded H pattern. It failed, took out the left side low. You've done almost a one-to-one to the downside. And now it's trading up early this morning up $1.13 at 204.15. But that weekly chart, more than a one-to-one to the downside, is just suggesting that even though the 9-period moving average is still very strong over the 14, that there's a work in progress here, a digestive phase. And let's just go through it. Look, if you go through NVIDIA, which is now up 11 at 805 pre-market, 806.70, that candle yesterday, that was a pretty ugly candle. And, Friday. And yesterday's candle was an inside bar. But look at that weekly chart. It's saying there's nothing technically wrong yet in the weekly and monthly charts for NVIDIA. But on a shorter term basis, this is a problem. That double top that was made with a round number 974.00 all-time high on the 8th of March. You can go through a Vagio, which is Broadcom. Look at this. Also a really ugly candle. Look at those 4 candles going Wednesday, Thursday, Friday. And then yesterday was just kind of so bar up 6 today, 1231. This one had a 1438.17 all-time high, but it also had a 1413 round number high and a 1395 open and 1350. So all of these round numbers are suggesting that there's been a problem. A lot of selling. It's now down to the 1200s, and it's a peak E in the weekly chart and a leg F. I think this is going to turn into an instant restart at some point, but I'm calling it a leg F, maybe a peak F in Broadcom for the monthly chart. Now, why on earth did that happen? How can I have the price on the right and the left? So let's just go to this, and it says price axis, display left side, get rid of that, and we're back to normal. Good. That was easy. We did this the other day. Someone wanted to know about Micron. I said Micron has made a little double top in the 130 area. Pulling back is now at 109, 30 points down from 100 and 30. That's a pretty big business, about 11% or so, and peak F in the weekly chart, and only a leg C in the monthly. Look at that beautiful cup formation, broke out of it, Micron Tech, Semiconductor. I don't want to go through them. What I'm saying is, now we're in a different era. Era on a very short-term basis, looking at daily charts that might implicate weekly charts, and that just says the leadership in the semis has been broken, at least for now. And now you have to look at what else is going on. So what's fascinating, so Visa, was that earnings today? Tuesday. I don't know if the earnings have come out, but Visa's up $1.97 at 274.30. It is a Dow stock. But look, weekly chart in the 290 area makes an all-time high. It's trading now at 274. Now, that's a pretty big pullback. Look at the weekly chart. Peak E, the 9 is still over the 14, but it's decidedly lower than it was. And at peak D, if there's no new high this month, and there's only exactly a week to go, we'll see what happens. So you can go through all these different areas, different stocks, but most importantly, you've got, is it Exxon and CVX coming out with earnings a little later this week? When would that be? Is that in the next day or two? And you've got IBM. Yeah, well, this week, I don't know when. But look at this. Exxon has had a fantastic move, all-time high. Just unbelievable. This huge behemoth of a company. 123.75 on the 12th of April. It's pulled back a little bit. It's still holding very well. The 9 is still over the 14. Weekly chart, I've got this as a peak B right now in the weekly chart, and the monthly chart just broke to a new high. I don't know what to call that. Is that an F? Is that an A? I don't know. But all I can say is that that's an all-time high. I have to do some work on this because it did break above the trend line resistance, and it's a dividend stock, and it's doing well. When you talk about dividend stocks, so you go to Verizon, that's a dividend stock. Wow, is that pretty or is that ugly? That is ugly. Look at that. You did a beautiful cup formation, tried to break above the 43s, couldn't do it, had a move yesterday with the earnings, goes up to the mid-41s, high 41s. It's trading now at 38.60 on the 200-period exponential moving average. And that double top here says, you got to be, that's what I've been saying to subscribers. But I can't, I'd love to choose the communications sector, telephone or Verizon, but cutting the cord and all the other stuff that's going on, that makes it really tough. Had a question about Alcoa. So Alcoa has been on my list as a stock that I'm watching closely, because if PAVE, which is the ETF for infrastructure, Global X infrastructure, I'm sure Alcoa must be somewhere in there, or something like Alcoa, makes a 48 round up. I mean, for an ETF to make a round number high, all-time high at 48. I mean, you can't make this up, right? This is 48 right there. 48, let me check. Yep, 48.00 on the 4th of April. Let me just put that in. 4th of April. And now it's trading down in the 37 area. So I'm just looking at this and saying, this is a very complex moment. And you've had selectivity in the sense that you've had gold soaring to record highs, taking a huge dive over the last couple of days. And that has to do more with the Mideast peace. I wouldn't call it peace, but at least a little bit of peace out there. And you've got crude oil also pulling back. So let's look at CX. This is CMAX. Cool. Look at that big move going up to 9.20 area. Now it's down to 8.18. That's CMAX SAB. This is a Mexican cement company doing really well. We often have this. We haven't had it for a while, and it's done fabulously. Trading, this is a single-digit stock, and I wouldn't say it's implied. Now, this particular move now, it's talking technically, when you get a move like this, a narrow channel, very often at a certain point, it just suddenly breaks above, and then it might want to retest that. How it retests and then breaks to a new recovery high is really important. So this is just telling us that the whole area of the cement in the infrastructure, it's been in play, and now it's taking a breather. And the breathers are really what That's what we're talking about right now. Can the market return to the upside? Even a lot of stocks, even like DraftKings, a lot of stocks are taking a breather. I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
The early edition is now 5 minutes to 9, and I sent out my newsletter right now. I had it already. I just forgot to press click, and I had all these questions. I went to on. All right, so I have sent it, and so let me just get going. This is what I'm expecting today. I'm expecting some kind of, let me just go to the futures right now. Dow futures are now up 103. So one of the reasons why we went long, added to our long positions yesterday, is because I love the way that the E-mini went right to the 200-period moving average. I love the way that the Dow cash acted, and the 120-minute chart all gave me signals to say there should be not just a bounce, but a bounce that has a little bit of temerity. It has some substantial move to, that's the Dow. I don't think they're all like that. It might just be, maybe the Dow is one of the leaders right now. I don't know. So we've added to that. Haven't done very much else. We might add to some other areas, but at this particular point, that's what we're looking at. But this is just a start, like you can't really tell on one day of moving up. You need much, much more. So within that context, let me just go to the cash, and I wanted to show what I'm looking at here. So with the cash Dow, that 9-period moving average has gone a long way to move up. But look at the way the stochastic the green line is starting to expand. That's really important. It's only at 12%, but you need to see that. That just says to me there's a good side there. We've got a little bit more on the upside, and then we've got to test exactly what's going on. That's the reason why we've also kept a little bit of a short position, because there's a greater emphasis on the long being 3 times long than the short, 1 times 1 short. This is the added position. Okay, let me just go through a couple of other things as well. U.S. this is the dollar, the yields up again. So the bonds are down another almost half a point. I just don't see anything moving to the upside, and that's a big issue. And that's also impacting the HGX, which is the Philadelphia Housing Index. There it is, which has been just on its way down for a little while now, from the 740 down to and after 2 o'clock, if the Dow is holding, I'd say a plus 85 or higher, that says it's a good chance it could close very nicely to the upside. If it starts to move and it's only up 20 points, that says it's going to struggle. But I think that there's some bias to the upside here, and that should be impacting the other indexes. Stay tuned. Great programming coming up. I think Jacob's doing it.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
Steve Rhodes started